Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
As Matthew McConaughey would say, he wouldn't say that, but he would say, all right, all right, all right. Oh, well, welcome back. It's been an interesting summer. A lot of stuff going on all the time. It's kind of interesting. Hey, before I start, I just wanted to remind everybody we've got a seminar coming up. It's the highest rate of return you can get on quote-unquote safe investments. Interest rates have been creeping up a little bit, so the safer investments are yielding a little bit higher. That's a good thing for an awful lot of people, especially anybody that's retired and is relying on that type of income. So that's going to be September 20th. That's a Thursday. No cost to attend. Seating is limited. Go to bullingtoncapital.com to sign up online. And again, it's going to be at the Corporate College, Tri-C's Eastside Corporate College. And you can just find out all about it if you want to go to bullingtoncapital.com. And with that, talking about safe investments, I keep my eye on that quite often. Actually, just about every day. And it's interesting. We've been talking on this program for months now about using senior floating rate note funds and short-term treasury funds for the safer portion of your portfolio. And they're all down a little bit, not a lot though, just a little bit. And they're down significantly less than the more popular products over the past few years, because those had slightly higher yields. And now people are seeing why the yields were slightly higher, because they're down 2 to 3 times more than the products that we're recommending and continue to recommend here. Yeah, so that's actually a win. And the products that we've been talking about here, at some point in time, their principal value is probably going to recover, and they're going to recover much more quickly than the longer term bonds that we've been kind of warning people against. So, and I know it's really hard, because you see the word government bond, and then you see an interest rate that's higher than a CD rate, and you think, oh, that's got to be safe. Well, see, there's this thing called interest rate risk when you're holding on to a long-term bond. And long-term bonds typically pay more interest than a short-term bond does, and interest rates go up, those long-term bond prices drop. Oftentimes they drop like stocks, or faster than stocks. In fact, the bond market, long-term bond market, is negative this year, and the stock market's up. Think about that for a second. So it's really important that you understand that, or that at least your financial advisor or investment advisor understands that and is trying to do things to help you out there, because they can offer a lot of assistance. And still, those categories that we were talking about, the floating rate and senior notes, bank loans to big corporations, those are really short-term in nature. The interest rates are generally pretty high. Right now, they're as high or higher than a lot of the longer-term interest rate products out there, which is really kind of interesting. That's what is often referred to as a flattened yield curve. There's all kinds of misinformation and actually good information out about a flat yield curve. So I'd kind of watch out for that stuff. We can talk about a little bit about that later in today's show. What is a flat yield curve, and why should you matter? Why should you matter? Why should it matter? I know why you should matter. Why does a flat yield curve matter? Sometimes it can. So we'll talk about that a little bit later in today's show too. And by the way, if you have a phone call, question, or comment, 216-901-0945, 216-901-0945. It's the number to call. That gets you right here into the station. If you have questions you'd like me to talk about, you can always email them, bill@bullingtoncapital.com. That's bill@bullingtoncapital.com. So email any questions you'd like to have me answer on the air, and I'll try to do it. So, having said that, I was writing down a couple of notes about the things that I'd seen today. And, I just remember. I sent out a newsletter this week, and I've been sending them out at least twice a month now for a couple of months. And I'll probably continue doing that. Occasionally I'll see something that I really like. And what I'm doing is I'm looking at a news service that gathers all the information. It gathers an awful lot of articles from all kinds of news sources that they feel like this company feels like we might be interested in. And then we go down through them, and they actually recommend them. They recommend various stories, and then I take a look at that. I read them, and then I select the stories that I think you'd be interested in. And so this past week we sent a couple of them out, and I thought they were pretty appropriate for what we're the things that we're seeing right now. And one of them was, is this a correction, or is that correction coming, or is it the start of something really big? I'm summarizing there. And the reality is that nobody really knows that until it's too late to do anything about it anyway. So, but it's fun to think about. And there are certain things that you can look at. You can look at valuations on stocks. And if you don't know what that means, a valuation is just how much is it normally worth. And those are all just estimates, incidentally. But some of them are, you have ballpark, and then you've got estimates that go way out of the ballpark and, actually way out of the atmosphere and into another universe sometimes. So when you got a company like Netflix, who's been dropping pretty quickly, who actually went way higher. They always did. They go higher than you think they should, and then it starts to come back down. People went, is this indicative of everything? Because everybody loves I love Netflix, the service. I love their service. I like the company. I don't like how much it's selling for relative to how much a company would normally sell for that's doing the kind of business that they're doing. It's kind of like a house. I like to use real estate as an example an awful lot, because I think that more people can relate to real estate. Like, let's say you got a house in a neighborhood, and all the houses in that neighborhood are selling for about $120 a square foot. Okay, so if you had a 2,000 square foot home there, $240,000 would be normal for that neighborhood. And let's say the neighborhood's fairly large. There are a couple hundred houses in that neighborhood, and they're all right around $140 a square foot. If one of the houses comes in and they're asking $480 a square foot for it, and it looks like all the other houses in that neighborhood, I think it'd be safe to say it's probably overvalued unless it's sitting on top of a major oil or gas well. See, there could be something there that would actually make that worth that. So you can't just take the price that's being offered and make your whole decision based on price. So there may be another reason there. However, if you find out, no, actually, they're just asking that much money for it because they feel like it's a seller's market and they might be able to get it. And maybe they graduated from Trump's business school, and you always ask for twice as much as you think you're going to get, so that you try to get if you do that, and you'll get more than the average, which is probably true, actually. I mean, he did become president. I'm just kidding. So if you were looking at that, you'd say, wow, why is there that house selling for so much? Just like a company like Netflix. Why is Netflix selling for so much? And let me go into that for a second. You know what? I don't have my Y charts up. I use a service called Y charts, especially when I'm out on the road, because it's a lot easier to sign into than my Bloomberg is. And which I think is really interesting is Y charts is actually a little more accurate in many cases than Bloomberg. That blows my mind, because it's a fraction. It costs 10% of what a Bloomberg costs, literally. And Bloomberg's good for a lot of things. When you're just looking at basic data, can't beat Y charts. Anyway, so I look at Netflix. Their revenue was close to $14 billion last 12 months, was up 40% year over year. That's huge. That's gigantic. Gross profit margin, 41%. That's big. Net profit margin was close to 10%. That's big. Their sales over the last, that's what I just talked about, is almost $14 billion, up 40%. The market value of the company, though, is $150 billion. So they did $14 billion in sales. Their profit was less than $1 billion, but the company's selling for $150 billion. If I put $150 billion in 10-year treasuries, right around 3%, okay, I'm going to get an awful lot. I'll get $4.5 billion in treasuries. Netflix has only made $989 million. You see the problem there? That's a problem. The average company's profits, and a company growing this fast, let's give them the benefit of the doubt, should probably be earning about twice as much money as they've earned. And I can't even bother going through the math on that with you, because I would lose every single listener like that I have, all 5 of you. I'm just kidding. But I got a lot of sleep last night. You can tell. Got a lot more energy this morning. So anyway, you wouldn't want to be owning Netflix at these prices, even though it's a great company. And I got to tell you, there's this guy Joe Waterman. I've been talking about his options classes that he teaches. This guy's an options whiz. He was a floor broker on the exchange, Chicago Board Options Exchange. Lives here now because they shut that down. He was done very well. His wife was from this area, so they moved back here, and he's teaching classes on it. And he's got some strategies for that I think are really interesting for that sort of thing. Now that it looks like it's in a confirmed correction mode, there might be some things you can do there that could be very profitable for you. And I won't worry about talking about that stuff anymore. So I'm so glad this guy moved to the area. And you can find him on Meetup, by the way. Waterman, Waterman, lives in, actually, I take that back. His classes he holds in Hudson. So he can teach you how to do some other things that if you really are interested in that sort of thing, want to take a more leveraged approach. You don't need a whole lot of money to do it. That's one of the great things about it is, and the potential for gain's pretty high there if you know what you're doing. You really got to know what you're doing if you're going to mess around with that stuff. But I'm so glad he moved to the area because I don't have to try to explain it anymore. I just talk to Joe. But anyway, I think I got I'm actually pretty far away from the commercial break. That's interesting. Normally this time flies by so fast, I'm always getting interrupted by the music. So anyway, we're talking a little bit about Netflix. We're talking about trying to find the highest return on quote-unquote safe investments. That's something that an awful lot of people are interested in most of the time. And I know why. Everybody wants to have safe returns, and that's a big deal, especially if you're nearing retirement age. If you're taking money out of your assets, that's a huge deal. You can't really afford to be getting 50% declines in your portfolio value that take 10 years to recover, i.e. the S&P 500. That it was down 50% twice in one 10-year time period. It took over 10 years. Over 10 years, it had negative returns. So I don't care how well it does when it's going up. It's how far does it go down, and how long does it take to get my money back when you've had a big correction? That is actually the most important question to be asking. And when people come in, 3 different people I talked to this week, 3 different people, all asked me, what else should I be asking? And you know what? I forgot to tell them. What you should be asking is, how far down do your strategies had they dropped during the big correction, and how long did it take for them to get back to profitability? That's what you should be asking. So when you're talking to advisors out there and they're recommending a portfolio, that's what you want to ask them. If you're going through another 2008 and 2009 or another 2000 through 2003, how far did it go down and how long did it take to recover? That's more important than the total return. By far. By far, that's more important. How far did you go down and how long did it take you to recover? Let's say your average return's only 6%, but you were only down 18 months and you made all your money back in 18 months and we're back into profitability 10 years later, like by a lot. That portfolio for somebody who's taking money out of the account every month will outperform the one that was 100% in the S&P that smoked everything as far as returns go, as far as gross returns. So the higher return actually had the lower return for you because you were taking money out of the account. And when you're looking at the returns, all it's showing is the total return with no money taken out. So you got to be really, really careful of that. In fact, in our industry, they call that the upside and downside capture ratios. That's what they like to do. They like to come up with a name for everything. They're like the French people. They got a different name for everything. I'm just kidding. That was a bad joke. That was an old joke. It was bad when it was old. Yeah. Anyway, they come up with different names for things and downside, upside capture ratios. That's a big deal. When you're getting ready to take money out, and by the way, it's also a big deal for an awful lot of people who may not have the stomach or the risk tolerance to be 100% invested in stocks. The vast majority of people think that somebody's going to wave a flag and let them know when it's time to get out of the market and then wave another one to let them know when it's time to get back in. Even when those types of strategies worked fairly well, and by the way, very few of them still work anymore because the market's so dominated by computers now. So very few of the things that worked, say, 10 years ago are still working today, or they don't work quite as well. Let's put it that way. They don't work quite as well. They do a good job at lowering the risk or lowering the volatility, but returns have lagged over the past 10 years. Prior to that, your returns would have been higher. So you get slightly lower returns, but you've gotten a lot lower risk. And if you actually look over a 1 or 2 year period, sometimes you're going to be really upset at the difference in returns. So things change. Now that I hear the music, that means I got to take a real quick commercial break. You're listening to Bill Bullington right here on 1420 The Answer. Stay tuned.
And you feel so lonely, but you keep on hiding, 'cause you feel so guilty for what you've done. When the hardship comes,
And we're back. Hey, if you hear anything you like or don't like, doesn't really matter. You can also email that, bill@bullingtoncapital.com. Or if you want to sign up for the upcoming seminar, the highest rate of return you can get on safe investments. We're going to be looking at a bunch of different stuff there. Some of the stuff considered safe that may not be as safe as you think it is. Some of the stuff that is safe that you may not realize is out there. And I think it's going to be a lot of fun. You can sign up for that seminar. By the way, that's a Thursday night, September 20th, 6:30. Tri-Cities Corporate College. No cost to attend. Seating is limited. And should be a good time. So, and feel free, incidentally, if you want to email questions, you'd like to ask questions, but you're in your car, you don't want to pull over, you don't want to call and drive, and I would encourage that tremendously, especially knowing the way that I drive. So when you do have my full attention, so you can always go to my website, submit those questions there. I'd be glad to talk about it on the air. And very interesting time. And I did get a lot of questions, by the way, the past few weeks on the impending trade wars. And it sounds like a lot. And there are always some people who are going to get hurt, even in the normal, natural way things go. Like if you have all of a sudden a bumper crop in one area of agriculture in 1 year, prices will drop. And that's not because of a trade war or nothing. That's because the weather was conducive to growing whatever that crop was. and that can cause it. So when you look at the overall picture and the amount of money that they're talking about with these trade wars, it's not a significant percentage of GDP. It's incredibly small. Very large for the people that are directly impacted. And I always feel bad for them, but I feel bad for farmers anyway. I mean, when, like I said, you get a bumper crop one year, prices drop, and you're like, oh, and a lot of that stuff rots in the silo. That's just the way things happen. So they're kind of used to that. They don't like it when it's a man-made problem, and I understand that. And there aren't any good answers to this. But the reality is, will it affect an awful lot of people? The impact, when you spread it out across the entire population, the impact is muted somewhat, because what ends up happening is the consumers end up paying higher prices. So the argument is really over who's going to get a bigger piece of our money. That's what the argument is. Who's going to be the one to get the bigger piece of the consumer's money? Because you're still going to buy food. You're still going to buy stuff that's got soy in it. You're still going to buy technology products. It's just how much you're going to pay for them. And if the price goes up, does the consumption slow down? Well, I guess if it goes up a lot, yeah. If the price goes up by a couple percentage points, I'm not sure people even realize that it's gone up. Even let's say a $30,000 car, you get a 5% increase. Now it's $31,500. The number one question people have mostly is, will the bank lend me that money? Not, if I wait, maybe it'll come back down. And then that almost never enters the discussion. I could just see that now. Be kind of funny, actually. But so anyway, that's it's another thing. There's another area. It's called healthcare. Those guys are always arguing over, that you got the insurance companies on one side, you got the providers on the other side, and they're always arguing over who's going to get a bigger piece of our cash. And that's an issue, especially for people when you're getting close to retirement. When you're getting close to retirement, healthcare is a big time issue, because as you get older, your body's wearing out. I'm living proof. And you go to the doctor a little bit more frequently. Things start to wear out. And you're spending more of your income on those services, and those services have been rising at a pace that 3 times the inflation rate. And again, it's the insurance companies and the health provider organizations that are arguing over who's going to get a bigger piece of our money. Now, what really kills me on that, that's something that's really, really hard during retirement to plan for that. You have to make a plan for it. Okay? And your plan had better be relatively flexible, because that stuff is changing unbelievably quickly. And it's changed dramatically since Trump took office, and nobody's talking about that. Nobody's talking about that. But I'm telling you, I pay attention to it because it's part of my business. It's part of my personal life, because I get to pay my own health insurance, which incidentally costs me about $1,200 a month. Think about that for a second. I'd like to pay that bill. By the way, I still have co-payments and deductibles on top of that. And then I get all these doctors who are in my network. They agreed to accept what the network was going to pay, except that they have this contract that you have to sign when you go to the doctor that says you'll pay anything that we deem reasonable, even if your health insurance doesn't cover it. And I'm going, wait a minute. You guys said you would take the health. Why am I paying $1,200 a month plus a copay and a deductible if you guys are going to bill me whatever you want anyway? What kind of sense does that make? And that's, by the way, a relatively recent development. And it's not a good thing. That's rough. That's really rough, especially when you start getting closer to retirement, because your body starts wearing down. So I'm going to get a guy on here. I try to call him a couple times. He's very well respected. He's a health insurance agent. That's all he does. And so he's followed this very closely. So if I can get him on the radio show, I'd like to get him in the future, because that's a big deal. All the polls that people are nearing retirement. And by the way, if you're 20 years old, you should be thinking about this. Actually, you should be thinking about this when you're 12. because to accumulate enough money to walk away from your job and be able to be self-sustaining is a bear. It is a bear. It's a lot harder than anything else you're ever going to do financially. Think about it. If you're going to pull out 4%, you're going to pull out 4% a year and you make $50,000. Okay, you're going to need 25 times that amount. What's that, 1.25 million? 1.2 for 50 grand. Think about that. If that's what you're going to. Now, this is why Social Security, by the way, and pensions are so valuable. And I've been talking about this for 30 years now. 30 years, still nobody listens. I'm just kidding. Some people do. So the pensions that you get, the pensions that teachers get, the pensions that government employees get, they're awesome. Their pensions are awesome. The pensions that are going away for everybody else in private industry because the cost is astronomical. Okay. And now you're required to figure out what this money is and then try to do this on your own. And it is a bear. It's a bear. To accumulate enough money and then to be able to invest that money, to be able to pull out that 4% a year plus inflation or 5% a year plus inflation and not run out of money is also a bear. It's difficult. And that's one of the reasons I decided to focus on that area because that's kind of my personality. Somebody says, are you going to go left? You're going to go right? I think we got a phone call coming in. Oh, no, we don't. Well, if you would like to call, you can call us 216-901-0945. So anyway, it's tough to generate enough income off of your investments to be able to keep up with inflation and spin off enough income to live off of without taking on too much risk. You're going to have to take on some risk. And that the amount of risk that you are willing to accept is going to dictate largely what kind of lifestyle you're going to have. So all these questions are related to retirement income planning. They all are. And it's a big part of these, certified financial planner designation program. In fact, it's so important that they've got designations specifically for that. And one of the biggest risks, incidentally, is your health costs. That's one of the reasons I started running again. I'm getting in shape. I'm running every day now. I think I've run more consistently since I was in college. Okay? I played football. So we had to run all the time. And there was a reason for that. I'm watching my clients, a little older than I am, most of them. I'm catching up pretty quickly, it seems like. I am catching up. But I'm watching what's happening, and I'm going, The ones that stay active tend to stay healthier. The ones that keep working, I have clients that work into their 70s, and they don't have to work, by the way. You look at where they are financially, they're working because they like working. Is that awesome? They're working because they like what they do. I love what I do. So, most of the time I don't feel like I'm working. I feel like I'm doing something fun. So that's kind of a big deal. That'd be really a big deal. And I know if you were a younger person, that's something you need to think about, for a long time. I wouldn't take a job just for the money. I would take a job because you really liked what you're doing. I got to take a real quick phone call here, and I got Daryl on. Daryl, how are you doing?
I'm unbelievably good. How about you?
Oh, that's good. Pretty good, too.
Long time no talk.
Yeah. Yeah, I was wondering what happened.
I've had some medical problems. You were talking about health insurance. It motivated me to give you a ring. My ankle started giving me so much trouble, I ended up having it amputated.
Oh, man.
Yeah. So I got my prosthesis, and I'm walking on it, and I'm doing a lot better than I was before. So that's
really
good news. Yeah.
Yeah. Well, that's awesome.
Yeah. I washed my car the other day. I was out trimming hedges last evening.
Holy cow. That's pretty cool. Yeah, I'll have to.
This is just my temporary prosthesis. It's not a fancy high class one yet. takes 6 or 8 months for everything to kind of settle down. But you were talking about the high cost of health insurance, and I think I mentioned this to you a long time before, maybe when you were at my office, but there's an organization down in Barberton. They're headquartered in Barberton called Christian Healthcare Ministries. There's a website called chministries.org, C like Charlie, H like Henry, ministries.org. And the very best coverage that they have, it's not insurance, it's a bill-sharing ministry. And we've used them for over the last 22 years or so. And with my ankle problems, I've had over $600,000 or $700,000 worth of medical bills. They've covered everything.
Wow.
And you can pick your own doctor, and you may have to pay a copay, but you can pick your own doctor, and yeah, it's a great organization. And
yeah, hey, could you send me a link to that?
Yeah, sure can.
It could be great.
Yeah.
Yep.
Yeah, and as a matter of fact, as an incentive for people to spread the good news about the organization, they offer the incentive of a free month once someone that they've referred has been a member for 2 months or more. So that's a nice little perk also.
Yeah.
And yeah, my wife and I have used it, and she has that Lyme's disease, and she's had a lot of bills for that. And they've covered everything.
Wow, that's awesome.
That's yeah, I'll send you the link for that, and you can check it out.
Yeah, for sure. Hey, what else is going on? What's going on in the gun world?
Well, the gun world has been slow. There's no political threat at the moment, so sales have really dropped off. The feeding frenzy that happened during the Obama administration and the fear of Hillary really spiked sales, but it has dropped off, and there's still a few collectors that are picking up stuff. I've got a couple of items on consignment from people that I'm trying to sell, and higher-end stuff, and they're just not bringing the money. Nobody's even, in fact, I got a lower-end item for sale that's probably $75 or $100 under market value, and nobody's bidding on it.
Wow. Huh.
Yeah, so it's a buyer's market in the gun world at the moment. Yeah, it's a good time to buy.
Yeah.
You can have some real bargains.
Well, hey,
ammunition is way down. I see 9mm ammunition down below wholesale, down below $7.
Wow. Oh man,
around 15 back during the feeding frenzy.
Yeah, I was going to say I think that there was it wasn't a 9mm. I think it was .45 caliber. And that was I think I paid $50 for a box at the peak.
Oh my.
Yeah.
Well, maybe that was personal defense ammunition.
Yeah. Yep.
Yeah, the personal defense ammo was quite a bit more, but practice ammo for I think at the peak. 45 ACP was up around $18, $20, and it's down around $12 now.
Oh, that's good. Hey, I hear the music.
Yeah.
Let me let you run. I'm going to give you a call this week. We'll get together. And appreciate you calling. And right. I'll be talking to you soon. And you're listening to Bill Bullington right here on 1420 The Answer. Stay tuned. I'll be back after these messages.
You're all I've got. Carry me, carry me, carry me now. From my sinking sand to your solid ground.
And we're back. Hey, just wanted to take a little bit of time, give out a couple plugs here. The Vacation Fixation, you heard that commercial. I used them. You can go to vacationfixation.com. They were excellent. The service there was excellent. The had no problem with anything. They handled everything. So that was pretty cool. I'll be using them again. Anyway, and also the public service announcement. There is a free film and discussion. This is going to be Fair Lawn Public Library. Very nice facility right off of Smith Road, right off of the 18 and 77. Not too hard to get to. Saturday, August 25th, it's going to be 1:30 to 3:30. There's a free film, The World Within, C.J. Jung in his own words. So this is a film about C.J. Jung. He was a very famous psychologist. One of my favorite quotes. Excuse me. He did a lot of work on dreams and subconscious. Who looks outside dreams, who looks inside awakes. So I thought that was pretty interesting. And if you read any thing that he's written or any of his work or anything related to his work, you'll actually know what that means. One of the things I found was super interesting was knowing your own darkness is the best method for dealing with the darknesses of other people. That's really interesting. So anyway, that's going to be on the August 25th, 1:30. It's free, Fairlawn Public Library, 3101 Smith Road. You could probably call the library, or you could call 330-867-1118. And, I was just talking to the client, actually, that called in, and he helps people trading guns. It's a very legitimate business, and it can help you out. And I forgot the website name, but I got involved in shooting because I have another friend that is a member of the Cleveland Grays. And Cleveland Grays used to be a militia. They've done all kinds of things. It's that they own that building downtown that looks like a castle right on Boulevard, 1234 Boulevard Avenue, right near Playhouse Square. And it's a really cool building. I actually joined up just so I could go through the building because I like old buildings. And that was built in the late 1800s. And if you belong there, they have a shooting range. They shoot once or twice a month there. They've got range safety officers. They have classes there. I think there are lots of Cleveland policemen come and use that facility. But it's really inexpensive, and they teach gun safety. And that's actually why I was really afraid that if I've ever come across a gun for whatever reason, I'd end up shooting myself because I didn't know anything about it. Yeah, I knew nothing about it. And this friend encouraged me to come and try it. So occasionally I'll go, and it's super inexpensive. It's interesting to be able to go through that building, being a member there of the Cleveland Grays. So if you'd like to know more about that, you can email me. I'll be glad to hook you up with the people that enroll there. Some super nice guys there, too. I mean, super nice. You see a whole bunch of former military guys down in the basement, and just a good organization. So I guess that would complete my... what do you call that? I don't know what to call it. Local plugs, I guess. So, and I guess I also mentioned again, we got the seminar coming up. It's a while off. It's a while away. So that'll give you time. September 20th. And again, if you hear anything on this show that you'd like more information on, feel free to email us. And I have to apologize. My emails, and we have had an incredibly difficult time over the past couple of months. I don't know what it is. It just seems like technology continues to break, and we're there. We're trying to fix it. So anyway, make a long story short, I found some responses to the radio program that I hadn't seen before, and some of them are a couple months old. So I'm going to be responding to all those. I just found those yesterday evening. And I'm going to be responding to all those Monday morning. So I feel bad because I did not know they were there. And this stuff is very important. So I guess I would encourage you to call. Just 330-664-0700. The phone number is all over the website. That works. Actually, as I say that, my phone died. My phone literally died on Friday. And these are these computerized phones. The phone's not that old. It just stopped working. Yeah. And so I had to get another phone and hook it up. Talk about frustrating. So I understand. I know what everybody feels like, especially when you're in your past your 50s and you really don't want to spend all that kind of time learning all this technology, and you pick up your phone and it doesn't work. And then you're on the phone with tech support for like 6 or 7 hours. And they're trying everything in the world. And I go, hang on a second. I got a newer phone. I'm going to just take it out of the box and try that. And it works after several hours. So I'm pretty sure that's one of the reasons that we have a job, because financially, when you're logging into your accounts on the internet, occasionally you're going to have problems. I've had problems with every institution I've ever worked with. So sooner or later, and thankfully they're not super big problems anymore, and we've worked through these problems so much, so frequently, that we have it down. So we can get that kind of stuff done pretty easily and pretty quickly. And one of the services that we provide at Bullington Capital to all of our clients is a digital vault, and a place where you can hook up all your accounts and you can see everything you have in one place. You can put your wills in there. You can put your trust documents in there if you want. So if something happens to you, everything is organized and it will be easy to handle if something should happen to you. And oftentimes it's very handy that you have this stuff. You can actually copy your tax returns and load it up there. So if you ever wanted a copy of your tax return, you just log right on. And by the way, this company is called eMoney. That's the one that we subscribe to. It's very expensive. If you're doing it by yourself, it'd be a lot of money. We provide this to clients at no cost. And if you come into the office, set up an appointment, we'll help you set up all your stuff. So we'll help you and show you how to access it and show you what it means, how to use that. So that's something that we do that we try to help people with, because I feel very, very strongly that you should probably try to be organized, and it's not as difficult as you might think it is, especially if you're dealing with somebody who has some background in technology. And Gary Miller, the guy that he does all the tech work for us, does all the trading, and also helps out tremendously, does most of the compliance. We all wear a lot of hats there. There's 3 of us, full-timers and a couple part-timers. So we all do a lot, and we're very good at what we do. Those guys are extremely good at what they do. And Melissa King is actually our chief admin. She does an unbelievable amount of paperwork and an unbelievable amount of things, and things are always changing, and she does a real good job staying right on top of that. And then people go, well, what do you do? I just do the research investment, doing the investment strategies overall, talk to clients, and basically write down a lot of things that they end up doing. But anyway, so that's basically the Bullington Capital in a nutshell. Yeah, that's what we do. Try to help people make enough money to be able to retire and try to keep them from running out of money when they are retired. Not that easy to do. And something that, I think they need to start teaching this to kids when they're about 12 years old. Realistically, this is at least as important as any other subject they're ever going to be taught in all of their schooling. How do you become financially independent? How do you become not dependent on the government or anybody else for that matter financially? Because at some point in time, you're going to get too old to work. And I know young people don't really think about that. The thing I like about 12-year-olds is they're thinking about getting really rich. That's what they like. That's on their mind. And unless you're going to be one of the Kardashians, normally you're going to have to work and you'll have to save, and you can build businesses. But those numbers are big numbers, and I think you should actually start to think about those. Try to get those thoughts into kids' heads before those hormones kick in, because you won't be able to talk to them again until they're in their 30s. Once the hormones kick in, it's over. I'm just kidding, kind of. But so it's a big number. I mean, to be able to retire. And you think about this. If you want to generate $50,000 of income reasonably safely, you need a little over $1 million. If you were getting $25,000 from Social Security, that's great. That cuts that number in half. So now you still need $500,000. If you're in your 20s and inflation averages about 2.5%, that number is going to have to be closer to between $4 and $5 million. We'll talk about that on future shows, but now that I hear the music, that means this show is over. You've been listening to Bill Bullington. I'm here every Saturday morning from 11 to noon on 1420 The Answer. Have a good weekend, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional. The preceding program has been paid for by Bullington Capital Management, LLC.